RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's public broadcast, our daily brief here. I think this might be one of the last few ones that we do. We had sort of our team meeting last night, and I think we've all agreed that we're going to wind down this public broadcast. Julian did one yesterday. So as a result, I was kind of like, okay, well, I guess Chris and I were sort of talking and figured that I guess we might as well do one here to end the week. And if anything, this is a tease. All you people that do actually enjoy these public broadcasts, we're basically going to do this behind the paywall. Although we do have a 30-day trial here for you to kick the tires. And but long and short of it here is I think we're going to try and transition to doing things pretty much just on the site going forward. We'll see. I mean, nothing's written in stone here, but at the same time, too, I think doing these sort of duplicate shows is a little bit redundant. Having said that, today is Friday, TGIF and all that. And on Fridays, we actually tried to bring on site OGs, for lack of a better word, I guess. People that I've had the pleasure to work with, educate. They've taken their own education and carried the ball forward, keep learning. We're all students of the market forever. This Friday also being the end of the summer, I thought maybe it would be kind of maybe a good idea to do the public broadcast today, sort of a last send off. Unfortunately, the message isn't exactly the most bullish message, but if anything, the most important thing here is it's a clear message that we're giving you. No bullshit. So you can start your Labor Day weekend off at least a clear reading of the market. But our after party today, our OG, our I don't know, we should call it maybe Value Fridays or something like that. But we have the privilege to have our level 2 instructor on the call today. Marat, are you there? You want to say hello to these people in the public and tease them a little bit?
Hello, everyone.
There he is. He's like all the freshman girls in college, man, they'd be throwing their panties at him up at lecturing them at the Professor Marat. He's just got the suave, debonair Turkish German flair to him. Can I kiss these people's butt anymore? I love working with these people. I even said before we got the broadcast going, they are the reason why I stick around and I show up every day, because our community, these people are just so awesome. So Marat's going to be rocking TRI's world here today with a big whack of relative rotation. And then what else he said? There's a nice little treat that you were going to give the community today. Something, what was it that you were going to also talk about?
The sector rotation model and the market cycle.
Oh, sweet. So if you're a fan of cycles, there's of course I've been studying cycles. In fact, I used to work with those guys at the foundation of the study of cycles before they were ever a foundation. I remember when they used to be soliciting me for their sort of seed financing round back. Geez, and that might have actually been back in the 90s, But anyway, if you're a fan of the foundation of the study of cycles, all that, Marat here, also Cole on the site. He loves working with their tools. Larry Williams, he's a big fan of those cycle tools and stuff. But anyway, Marat's going to tease our audience here heading into the weekend with some awesome over-the-top value. So I'm super stoked to have that convo with you here today, sir. So I thought I'd do just, our little 20-minute, half-hour review of sort of what's going on in the world. But the main event is once we're done here with this summary, we'll pop on over and go hang out with the German Turkish. Would you identify yourself as German? I don't know. You've been there quite a
Um,
while, eh?
I identify myself as from Bremen. I mean, my parents are from Turkey, but I was born here and grew up here, and my identity is here in Bremen, Germany, actually. Yeah.
There you go. See, I mean, do you listen to how suave he is? God, the panties literally are falling off my legs. I can't hold them on. Oh, I swear. All right, let's get serious. Hey, this is money. What are you doing? Hey, quit screwing around. All right, we got to sit up straight. All right. Okay, so what the hell happened in this world today? Being the end of the summer, I don't know whether any of you are a fan of the Jack Schweiger books, Market Wizards, but I remember back when I read the first one back in the, I guess it was probably the early 90s, late 80s. But he used to have a fun story. I can't remember what the guy's name was. I think it was from Bill Lipschitz or something like that. But there used to be this famous guy who used to come into the brokerage house the last week of August every single year. And he would come in and buy a big whack of S&P 500 put options, and then he'd disappear. Like literally, middle of August, you could literally set your watch to it. If you've read the books, you know exactly the story I'm talking about. And then every single year, the middle of October, the guy would turn up mysteriously out of nowhere and cash in his fortune that he made on S&P 500 put options because the market usually breaks. September, historically, you heard Julian even say yesterday, September historically is usually the worst performing month in the stock market. So that's our backdrop that we have to start this conversation with off to begin here today. Hey, Greg. And by all means, everybody, I'm not going to interact too much with the YouTube audience here because really I would like to encourage you to come on over to the site. And I try very hard. In fact, actually, some of the videos that we did here through the week were like 2 hours long because I just sat and answered people's questions, and we had a great time talking about the market. So point of the matter here is we are in that last week of August. Most of the professionals are actually off in the Hamptons right now. Very few people, only the people who have to be here are at their offices. I mean, I have the luxury of working from home, so I don't have to live that office life. But you can imagine the schlubs in New York, and I don't even know what the weather in New York. Geez, we didn't even really have a summer here in the Lower Mainland here in Vancouver this summer. But a New York City at the end of August is usually just a humidity fest, and it's like, so I would imagine most of the pros, they're not even at their desks right now. So having said that, we did have one of the Fed's more preferred econs come out here today. I don't know whether we're showing, I guess we're not, but you can see here's our little itinerary. We had the personal consumption expenditure report come out, and actually still coming out at about like 2.5%. So the interesting thing there is that, ideally the Fed wants to get these inflation pressure down below 2%, their long-term objective. I don't know whether they're going to be happy with 2.5% reading, but I do see that this PCE is very stubborn here. Interesting also too, actually here, I always like to just have this sort of 2-star or higher kind of numbers. Interesting inflation report out of Europe. Core sitting at 2.8, still pretty high. And as we said there just a second ago, had the PCE index come out for the States, and you can see 2.5%, basically in line with expectations. I don't know whether it's anything to really to write home about. The only problem that I have with all this is if the Fed does go and cut interest rates, that's going to send very clear messages to the market. And actually, the inflation, sort of the leading index that I like to follow for that sort of when is the Fed expected to act kind of idea, it actually got punched in the nose very hard yesterday. our short-term bond market here. Yeah, and you can see the bonds, they're not really that happy right now. So you can see when these are the bond prices. So when price goes down, that means yield is going up. And you can see there's something not right about this image here. If the Fed was going to be cutting rates, and I think it's a good idea if we really want to follow Fed policy. I mean, they killed the euro dollar market. That was absolutely the best proxy ever. We used to follow what was called the TED spread, but you know, these stupid central banksters, don't get me started on all that shit, or I'll be ranting here for an hour. But they killed that. So now the best thing we can do is follow sort of like a 2-year note in the marketplace. I've been talking to you guys. If this chart does go and actually double bottom, then it does, I think, mean that we've got officially recession ahead of us. And the Fed will need to start thinking about lowering interest rates in earnest. And you can see how the market was working its way up, and then we had those inflation and sort of economic reports come out yesterday. I think it was like GDP or something, and you can see the very well-defined double top. And then today's price action, and with that PCE coming in still relatively firm, this rally was just firmly rejected off of these highs. This is not an image that the Fed is going to cut interest rates. The fact that we just got whacked here, which is a little bothersome because the whole market has basically assumed that they are going to cut rates. And if anything, they always say, you know what assuming does, it makes an ass out of you and me. I wonder if we might be in store for another little surprise. Fed's talking about lowering interest rates, but they're going to say, we are data dependent. And as we can see, the inflation data reprint here is not moving down, and it's certainly not at 2% yet. So anyway, keep that in mind. So that was sort of the econ that came out here today. And I think you can actually see that the stock market didn't really like what it saw. And interestingly enough, I mean, I did go and actually buy something, but I bought it just because it was so cheap. And it was basically sitting at the, I said that if my beloved Intel was going to go and put a W in here, then I would go and pick some up. So off of the daily price charts, this guy did W. And, you know, I'm a man of my word. You know how much I like my W. So I went and did a little bit of nibbling here. Not a hell of a lot of money. In actual fact, what I did was, and you can see there's the W, boom, 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 boom. Went and bought a little bit here on this pop through this high here, but I'll probably look to try and buy some more and reload zones and back against primary trend lines. But I think below $20, I think Intel is starting to look very attractive. This is a total specialty story, just because I think they've just thrown the baby out with the bathwater here. I mean, you can see just the top from the beginning of the year. That's quite a punch in the nose. Might even think about like bull call spreads and stuff like that in the weeks ahead. And I might even convince my TRI people to join me on this trade through bull call spread, but we'll see how that goes. What I did notice is, you know, as I said, that those inflation numbers not coming out overly exciting. If anything, this is a good sign that the market is kind of pausing here a bit. I do think that the odds are, you know, reload zones. Ironically enough, you know what I think the stock market's doing? And I think, you know, because NVIDIA is such a market darling that really this entire stock market is really nothing more than a reflection of the NVIDIA chart. And we did have actually a pretty textbook top come in there on the NVIDIA the other day, and that trade just seems to be working away here. And I wouldn't be surprised if this thing does continue working its way back down. Then that Intel probably comes back down, fills in the gap. I'll buy a little bit down below. But I wouldn't be surprised if our sort of September, October window is sort of like a flush, and something like NVIDIA probably come back down, test these lows. And you can see the setup, just basically shorting this top, beautiful outside downside bearish engulfing bar there. And just looking for a test of this V bottom to liquidate half of the position and then just ride the free position. And the irony of it all is, look at this image. This is so cool. is crypto a leading indicator in the marketplace? So look at that image and notice how the stock put in a top and then it rallied back up and then it put in a very well-defined top and starting to break back down. And I've been barking to all of you about this Ethereum trade for quite a while now, and it's basically the same thing. Let's get a nice. So there's the top, there's the pullback, there's the counter trend rally back up against the high, there's a pretty double top. And this is literally exactly the same trade. I mean, it's almost like carbon copy. So if this thing works its way back down, comes back down, tests the low, then we buy a bit back at the 2-to-1 risk reward level, stop to scratch on the remaining and just see where the hell the thing takes you. So I do find that this is interesting in that, crypto is kind of on the outs right now. I don't hear a lot of rhetoric in the public about how wonderful crypto is. And of course, all the crypto cheerleaders, half of them are in jail. What a perfect analogy to this whole story. At the end of it, half of them are all in the slammer. Perfect analogy of venture capital. And the worst part about all of this, I suppose, is the guys that are actually the real criminals, like that Dan Freeberg guy. He's completely out, scot-free, not a care in the world. And yet the pigeons that he suckered into doing his dirty work in the marketplace, SBF, he's going to spend the rest of his life in jail. Oh, who knows? So maybe he gets out early. I don't know. Anyway, sad commentary on this space, but if anything, really good lesson for all of you junior venture capital specialists. For God's sakes, don't do things like go and manipulate markets, even if they're unregulated. Big Brother is going to catch up to you eventually. It might take years for Big Brother to catch up to you, but it will. And I think to a certain degree, half of the reason why crypto is as weak as it is because all the guys, ironically enough, who pumped this market up this last cycle, they're all in jail. They're gone. Well, I suppose you could even argue like guys like McAfee, who are cheerleaders, are dead. But anyway, I digress. I guess the point that I would just make, and I've been talking to people a lot about this, is I do kind of think that things like altcoins and stuff are actually like one cycle behind Bitcoin. And if we look at the previous cycle, I suppose on the weekend we'll talk a little bit more in detail about the Bitcoin chart. I'll do up all my summary on Sunday, but I'll tell you, by crackers, I even put a tweet out saying that this is a really, really nasty 2-candle pattern here. And whichever way this 2-candle pattern resolves, that's basically our tell going forward. But I think with regard to things like the altcoins and stuff, I would not be surprised. This was the last sort of Bitcoin cycle. And you notice that it rallied back up to 61.8 and then had to come all the way right back down to the original bottom. I wouldn't be surprised if something like Ethereum, it had pretty substantial rally back up top. And I would not be surprised whatsoever if we have to come all the way right back down to 88.6s. And if we look at the total market cap, I've been talking to you guys about this recently, same sort of thing. There is the original double bottom. And I would not be surprised if we have to come all the way back down into this area for our ultimate low here. So unfortunately, it isn't the best risk takers environment. And like I said, all the guys who are manipulating these markets and pumping them up in years gone by, half of them are in jail right now, which I find hilarious. And you're probably going to find that like literally the day CZ is let out of jail, which I think is sort of like the big catalyst for crypto going forward. I don't even really know of any other catalysts in crypto that we should keep an eye out for, but I wouldn't be surprised if we're kind of weak into that event window, and that actually marks some sort of long-term cyclical bottom. So anyway, keep your eyes peeled for that. But I did find it interesting that things like Nvidia, this chart is looking a hell of a lot like that Ethereum chart. And I just wonder whether that's a nice leading indicator. What else should we talk about here? We've got about 5-10 minutes left. As we said, we talked a little bit about the econs. There wasn't really anything earth-shattering, but I will say 2.5% PCE. That's not a scenario that that fills me with, oh my God, the Fed has to cut rates. If they do cut rates, then that PCE is probably going to tick back up, and they never did get to that 2% number. Chicago PMI, Michigan consumer sentiment, all these indicators are coming in just sanguine. They're not really falling off a cliff. They're just like, meh. 46.1 for the Chicago PMI. That's a reading below 50, which should imply economic contraction, but at the same time, too, it's an uptick. It's sort of just hovering. And actually, I was quite surprised. A house that I was very interested in buying in Southern Illinois, they actually went and reduced the price, which has made me even more interested. So I might just find myself a citizen of Southern Illinois here in the not too distant future. I tell you, this place is just, it would just, oh. And it's actually a pretty good investment idea. It's just a question of, do I really need to be in a big hurry over this next 6 months to go and pull the trigger? But anyway, we'll see what happens. Consumer sentiment as well. Remember, here a reading below 90 is usually contractory. So you can see the consumer's not really overly happy here right now. And I think like we saw that like house price indexes and stuff like that were fairly uppy yesterday. Not really a scenario where things are crashing and the Fed needs to come and rescue the market. But maybe what we find is in September, the market does break coming back from the Labor Day weekend. I mean, I'll tell you, if a professional pulls up his price chart next Monday morning and he sees that image from NVIDIA and he's long off of the bottom, he might just say, we're up quite a bit on this investment. Would it maybe be a half decent idea to maybe ring the register a little bit? Ironically enough, this is actually, CZ's already out of jail? Oh, my apologies. I didn't realize that. So I guess he's playing low. I thought he was due to get out in September. I didn't think he was out in August, but I also would have thought there would have been a hell of a lot more clamoring in social media about him. He was due in September. All right. Anyway, Jackie's added a bit of a curveball here. He got out early. Interesting. I would have thought actually we would have seen more talk in the space. Well, maybe he's just playing cool. He's like, maybe he's going to take a couple. But actually, you know what? The easiest way to sort of keep track of CZ, and really I should wind this broadcast up here because I want to get over and talk to Murat about cycle stuff. But probably the easiest way for us to keep an eye on good old CZ. I don't know where to do it because I've got so many damn charts open here. No, I don't want to do it over there. I don't want to do it over here. Maybe I'll just do a new chart. Let's call it CZ. Jesus, that looks like a pretty short. That it looks so textbook. It's just ridiculous. But anyway, the easiest way to keep an eye on CZ, I think, is to keep an eye on this BNB. So if BNB's taken off here, well, then maybe that's a proxy on him. Maybe over it. Yeah, it looks heavy. I don't think he's going or doing anything in a big hurry. So, and actually, I see this whole thing right across the altcoin space. And the place, price looks heavy. That's probably the way that I would describe this. And this is a good lesson for all of you, like V bottoms. This was a V bottom. We just basically bounced straight up. V bottoms must be tested. I'd also argue too that was a V top. So my thesis right now is we are range bound, but it does look like in the near term, we're going to take a real serious look down below here. And let's hope we don't go into some sort of free fall here like these kind of scenarios. Ideally, what you'd love to see, if it's possible, is, down, come back down, candle body lows for trade location. That's probably like reload zones. Then we put in a nice little base down in here, and that would be like your Adam and Eve, or maybe Adam and Steve kind of setup. That would be ideal. But right now, I mean, let's call a spade a spade. Don't bullshit yourself. Don't kid yourself. There is no signs of a bottom. We just made a new low here this morning. At best, we're going to have to let this market finish today, maybe open up, consolidate tomorrow, which would maybe create a 3-bar fractal potential, and then Sunday we'd have to see some sort of rally. And let's cross that bridge when we come to it. Right now, this looks like a bear ABCD, which is suggesting it probably wants to probe down into these lows. And I have noticed that the junior crypto market, and it doesn't look like it can get going here. Tried to put in bottoms there through that sort of May, June window. And a lot of these bottoms are getting smoked here. And that just means to me, in fact, actually the message that I had, I think it was off of one of these charts, was just the buyers just never showed up. Actually, I think it might have been off of the Bitcoin chart. Yeah, here. So, the sad part about it is you can have a market technically and even seasonally set itself up. All right, this is the bottom. This in this particular case, this was off of good old Collins pump chaser zone. We dipped very briefly into 38.2s here on this candle here. So could we somehow bottom and then start moving up? Terrible trade location though, to be buying up here though. So on Sunday, we should have a very interesting conversation about how this chart also looks. And then also keep in mind, Monday is a holiday, Labor Day weekend. And we all know that, man, these guys, they love to F around with crypto through these holiday weekends. Unregulated market, things get kind of choppy. So I'm not really in a big hurry, whether it be the stock market. This to me looks very, very toppy. In fact, kind of like what we've done here with this trade. I like to actually show you trades on a regular basis. So, we've got this little one working here from, and you can see the levels. We're just going to let it work and we'll just follow it out. And it's exact same logic as when I did this for you guys. And just let this work and just let it do its thing. And the rules here now, I think simply put, you can see the NVIDIA. If we hit the 2-to-1, then we'll take half of the position off. Stop gets moved to scratch on 50% of the anticipated move. I mean, hell, you should be able to learn how to do this on your own just by watching this. And ironically enough, if I was going to have a price objective, if this is a valid short, then boom, 50% level WD GAN. Really, we should. And actually, interestingly enough, look at, there's a huge hole in the charts, big old gap. Everybody who's a student of mine took the level 2 program with our buddy Murad should know what the statistical probability is that this huge hole here will be filled in on the price charts. And of course, if that happens, oh boy, you can bet your bottom dollar the broader market's not going to be happy whatsoever. So let's keep an eye on that. In fact, I would even say that's probably a good ultimate price objective for this short. But, the proof of the pudding's in the eating. So let's see what happens here. Yeah, pretty comfortable with that. And then what's interesting about this, because the ES is just basically identical to this, here is the ES trade. It's basically the same thing. You can see that now it's up. This is just shorting 2 of the micro contracts. I actually did the short off of the big boys, and oh boy, that's a lot of money. And I was like, risking up to here on the big boys, that was like a $10,000 risk. And it's like, that's a little bit too much. So this is about $1,000 risk. And of course, 2-to-1s, that means this would be about a $2,000 reward. Interesting here at the price chart target. We just were talking gaps there a second ago. This is the ES futures. So if there's ever going to be a gap that's going to be filled in and respected, damn well the futures boys are going to be doing that. So that gap, I think, needs filling in. And if NVIDIA does come down and test its previous low here, then really all that means is we come down and we play against these lows, and we probably fill that gap in with a candle body as well. So let's see, just exactly the same way that I've been walking you all through this Ethereum short here. Remember, we had the short on Bitcoin and it got stopped out at scratch. I mean, you don't know what's going to happen, but long and short of it, that's just working away. So let's see how that plays out. And I hate to say it, somebody got really upset at me on social media the other day because I posted where is your ultimate price objective for this Ethereum? And I said, well, 2.618 is chaos theory, which would be against that 88.6. That's all the way down, basically back to $1,000, or just in and around that original low that was put in there a couple of years ago. And this is exactly the same thing that Bitcoin did through this consolidation. It came right back down against its original low there. So I think that's what our future is. Now, I would never really suggest that you listen to anybody's opinions and trade off of the opinions. What I would just simply say is, can you teach yourself how to trade setups? If anything, as I had said earlier, even a few times, and it's well after 9:30, so we should probably wind this up here. This was absolute cliche textbook setup. I even put tweets out basically saying it doesn't get much more cliche than this. And you can see that just working away. And this is trading setups. At this point here, I can absolutely guarantee you the crypto kids, if you listen to opinion, everybody was saying this was going to the moon. Is it contrarian trade? It's very difficult to take these trades, but nonetheless, you can see what's happened here. So I think that's the same sort of thing as stepping in on the stock market right here. I don't think it's a popular thought, but at the same time, too, this is about as textbooky as textbook setups get. And we even have a bit of a div here as the market was making new highs. We have Willie stupidly overbought. You can even see beautiful div in RSI. RSI's got now multiple M's working. You all know what you're supposed to be thinking if you see two M's on RSI. So, everything's in place. So, I mean, that's not really the most funnest of reports there for you heading into the Labor Day weekend. But I hate to say it, this is actually pretty darn cliche. So let's see what happens. Now, usually what happens, and, we'll have a Sunday report. So we'll talk a little bit more crypto, and we'll probably review this on the Sunday broadcast. But usually what happens is sort of the first day or two back from the holiday is a bit of a sort of sideways, and they'll probably even come back up and eat these wicks here. So I'm not anticipating that this trade hits profit objectives tomorrow. Well, I guess, Tuesday. But at the same time, too, I feel very comfortable just sort of sitting here, not doing anything, just let this work. And actually, I think that's a pretty reasonable risk to take, considering that if this market actually does fall apart here, holy crap, it has got a long way to go to the downside. And look at all these holes down here. You heard me talking about gaps earlier. At some point, this market is going to want to come back down and fill these gaps in. So just to understand where we are in the broader context of things and where we are seasonally, and understand that, hey, September is not usually a friendly month in the stock market. So put it all together, this actually makes a lot of sense. So it's not the funnest to broadcast. And, I probably on Sunday, I'll go into depth about railroad tracks and how basically I think the lines in the sands have been drawn for the market here. But you can all see the M working here. And L, here's the 50% rule. You heard me talking about 50% rules on the stock market and NVIDIA and stuff like that. Well, why would this be any different? And of course, this is the classic analogy. If you had never heard this before, for Pete's sakes, write it down. If you ever hear anybody, especially in something like crypto Twitter or, social media, say, no, put all the classic study lessons that technicians try to teach you about what's healthy and what's normal in the market. This time it's different. If you ever hear that, that is your signal to run for the hills. If anything, I hate to say it, I think that's my message for 2024. Because that was such a great lesson for everybody in the market to learn this year. And I doubt many people actually did learn it, but who knows? All our OGs at TRI, the good part about it, if you do the education program with me, you're forced to just sit and be with me for a year. You learn how to build and manage a small business of trading, which sadly, unfortunately, means put your opinions away because usually they're worthless, including Brian's, and you trade your setups. Scott says this time it's worse. Well, yeah. I mean, Connor, you and I were down there in the where was it? We were in Central America there, back in the winter, and I mean, God, yeah. I mean, I think you went to us to that little meetup in God, I can't remember what the hell the place was called. Remember, we ate pupusas or whatever in some fucking back alley. And people were like, if you were here a year or two ago, you'd be dead right now. It's like, oh, that's encouraging. Anyway, okay, so I'm going to stop talking because really, we've got the main event coming up here, and I've talked way too much. I'm so sorry, Murat. Let's head on over and let's party with Murat. He's an absolute badass. He is our level 2 instructor. He will teach you things as well that he has learned on his own. We're all students of the market. This is the 1 + 1 = 3. If you really want to learn how to be a professional in this space, I've never seen any other website, service, education service that is so robust as TRI. In fact, we were even talking about it in the lounge last night. Steven posted, we have so many different, like literally, I would call them experts now. Murat, you and I have been working together for the better part of a decade, haven't we? I mean, when did you actually first run into me? This is probably a good 10 years ago. I don't know. You can answer if you feel like it. I'll give you permission. I don't know. He's looking at me going, do I say anything? Do I say anything? I think he's muted me right now. Anyway, absolute. It's a joy working with these professionals. So I've given you my market summary here. It's not the prettiest of messages. I'm sorry. The good part about it is I do to actually do some stock purchases. I said I was going to buy the double bottom on Intel, so I did do that. So I'll do all those write-ups. Actually, I did to pay for that trade. I took profits on a stock that I bought off the bottom. So it's not really going to cost me too much if I have to sit on Intel dead money for the next little while. But just to give you an idea, I think what was it? It was I probably should stop wasting everybody's time here, but oh no, my bank brokerage platform just logged me out because I was taking too long to talk to you guys. But anyway, I'll show you maybe on Sunday. But I did actually. You know what? No. Anyway, wasting time. I did sell a stock, and I'll do the write up on the site and everything. At actually a nice profit to pay for this Intel purchase. So. Okay, Brian, stop talking now. Murat, you ready to rock these people's worlds?
I'm here.
All right, there you go.
I'm ready. I was born ready.
Confirmation. So let's all go and listen to the syrupy, suave Bremeninian? Is that what we'll call you then?
The Turkish delight.
Oh, Turkish delight. Oh, there you go. In fact, actually, I remember when I was in Germany. Remember you took us for a Turkish breakfast, eh?
Yeah.
That was freaking cool. That was a great memory.
I still go there sometimes.
Oh, good. Yeah, that was a great memory. So, okay. Have yourselves a great day, everybody. Good luck in the markets. We'll see everybody Sunday. For broiler chickens, I would strongly suggest to get your butt over to the site and at the very least take advantage of our 30-day trial. And if at the very most, if you really want to learn how to be a professional in the marketplace, there's no better place, in my opinion, to learn how to do this craft of running a small business of trading. So seriously consider about joining our education program. New term starts here in about 2 weeks or so. So, okay, all the best, hugs and kisses. Remember what your number one job is. Don't take no wooden nickels. The only thing left Brian to say to you is bye for now.